Hello, everyone. Welcome back to Financial News. I'm Ron Jankowski with Channel 4 in Palos Heights, and my co-host is Paul Munico from Ameriprise Financial. Today is April 11th, 2022. And Paul, there's lots of activity I'm sure you're going to report on. And when you're finished, Ameriprise shared with me what's going on as of this morning, and I'll report it accordingly.
Great. Thanks, Ron. Yeah, I'm going to do a monthly recap for the month of March, and we've lived it already, but I'm going to go through the data to let you know what it really was. Strength amidst adversity, despite all the macro punches thrown at the market in Q1. And we know what those punches were, higher interest rates, inflation at 40-year highs, a flattening yield curve, expectations for more aggressive Federal Reserve actions. We saw fading fiscal stimulus tailwinds, and of course, the Russia-Ukraine war. It's a long list of things that punched the market, and despite that, the S&P 500 index returned a positive 3.7% in March and finished the first quarter less than 7% away from its all-time high. Treasuries, however, sold off sharply in Q1 as the two-year yield climbed roughly 230 basis points, while the 10-year yield rose over 80 basis points. The US dollar rose 2.8%, and gold gained nearly 6%. And the broader commodity complex rallied roughly 25%. Alternative strategies helped reduce both equity and fixed income volatility during the quarter. Strategies dedicated to equity market neutral, multi-strategy, and non-traditional bonds posted solid results. Importantly, we believe stock valuations across several areas of the market have improved given the weaker performance in Q1 and pose long-term opportunities for investors willing to look past current volatility. It's also worth mentioning that asset prices already reflect a very aggressive rate tightening cycle from the Federal Reserve. Currently, investors are pricing in 7 to 9 25 basis point rate hikes this year. There's no question that investors face a challenging investment environment, which in our view at Ameriprise is likely to create additional headwinds for stocks throughout the second quarter. High inflation, disrupted supply chains, sky-high commodity food prices, an uncertain geopolitical backdrop, slower growth, tightening monetary policies, and a flattening yield curve with some inversions, and higher interest rates could all act to stall stock momentum in the second quarter. While recession odds for this year still remain low, in our view, the combination of these headwinds could hinder growth more than expected if they linger or cause consumers and investors to lose confidence or retrench their activity. Investors should lean on and consider diversifying their portfolio to help mitigate some of these risks. Diversification is not guaranteed, but it is your friend in these types of environments. Don't discount its value. Now, while you can't control where the markets head next, you can mitigate impacts from volatility with a mix of high-quality investments and risk-based asset allocation approach. In addition, successful investors usually take a broader, long-term view of macro conditions when the uncertainty is high. This can lead to staying the course in challenging market environments and or making more modest shifts in portfolio, often leading to better investment outcomes over time in our view.
Okay, Paul, I have what Ameriprise shared with us as of this morning, and I'd like to hear your comments about the U.S. stock futures are lower this morning after major indices ended a 3-week winning streak. And it really did well under all the issues that you just mentioned.
Yep, that's what I just reported. Literally, was we had all these punches the market took, and March was a positive month. Surprising. I mean, it's not surprising that we're getting volatility and we're down in the index futures today, but it's a long day before that market closes, and you never know.
Yeah, which way? And now Asian markets finished weaker on worries over the lockdowns and supply chain disruption in China. And you know what? Lockdowns, we have a COVID issue starting up again. They're shutting down, and that's a little scary.
It is. We just demasked here, it feels like.
Yeah.
And now there's these issues rising in China again. They do have a pretty strict policy over there. I think it's zero COVID policy, which they say is maybe impossible. Here we're a bit more laxed, but I hope we don't have to put our masks back on.
Oh, I hope
We'll see
not.
what the FTC guides us on.
Right. Now, Hang Seng and Shanghai are down about 3%, with China Tech down over 5%. Now, the backup yields remains the big story following the fastest week uptick for the 10 years since 2016. Now, the 10s are over 2.75% and the 2s are 2.56%.
It's some big moves for the 10s, and
Yeah.
the bond market is also volatile, and that's just some signs of it.
Now, they say that WTI crude is down 4% this morning. That's good news to hear. Hopefully it will
Hopefully.
help.
There's a lot
the
more
gas-
in the gas prices than just crude, but
Yeah,
We'll
well,
see.
that's a help.
at least it's in the right direction.
Right.
Yeah.
Gold is up 0.6%, and the Bitcoin futures are a minus 3%. Now, the year-to-date index returns are as follows. S&P 500 is a minus 4%, Dow Jones a minus 3%, and NASDAQ is a minus 12%.
Not horrible, given all those
No.
punches we've taken. I mean, we don't want to ever have down years, but we know they're going to happen. So far, this, isn't horrible. Let's just hope it doesn't get worse.
Thank you, Paul, for your report, what took place last week, and stay with us. We will be right back with a show called Your Money, and Paul usually has a great topic for that show. See you in a little bit. And we're back with Your Money. Thank you for staying with us. We have an interesting topic called Protect Your Finances Online. Let's let Paul give us some input on what does that really mean, Paul?
Thanks, Ron. I'm no expert on digital protection, but I've got a few general points to give the viewers at home that may aid them.
Okay.
During periods of crisis, cyber criminals often increase their attacks, taking advantage of the chaos to pry information from unsuspecting victims. So today we're going to go over some steps you can take during these turbulent times to try and help protect your identity and finances while online. Number one, you always want to create a strong password. A password is considered strong when it consists of at least 10 or more characters, a combination of upper and lowercase letters, with at least one number and oftentimes including at least one symbol. Cyber security experts recommend changing your passwords as often as possible, potentially every 3 months, as long as your replacement passwords, again, are sufficiently strong. You'll want to consider using a password manager potentially, which makes it easier to generate and recall strong passwords. Number two, update your antivirus software. So hackers are constantly looking for ways into personal computer systems. The best antivirus software providers stay one step ahead of the scammers, but you need to enable updates for that maximum benefit. Keep your antivirus program current to reduce your vulnerability to these types of attacks. Number three, look to use only secure Wi-Fi. Avoid logging into financial accounts when you're away from a trusted Wi-Fi connection. Public Wi-Fi may not be secure, which means any personal or financial information you enter during a public Wi-Fi connection may be easily compromised. At home, double check that your router is properly encrypted to prevent unauthorized access. Next is the basic one, but always monitor your accounts. You keep a close eye on your checking, savings, and investment account activity. If you notice anything strange, contact your bank or credit card issuer immediately. Give your financial institution permission to notify you of suspicious activity by activating alerts. Something else out there are these two-step authentications. You may want to turn them on or consider it. Many financial institutions offer the option of two-step authentication to discourage fraud. When you opt into this added layer of security, you will have to go through an extra step to verify it's you when accessing your accounts. It may take another minute of your time, but it might be worth the security of knowing you're making it much harder for hackers to breach your accounts. This is a good one. Stop before you click. Be wary of spoof emails and online ads that seek access to your passwords and other sensitive information. Many spammers use fake return addresses that are easy to spot, but others may have adopted more sophisticated schemes to get you to engage. So always be careful what you're clicking and be very protective of your private information. Don't just give it out to anyone you don't know or trust. But these are just some general steps that can help protect you. There's more out there beyond this, but this will get you started.
Good points, Paul. Thank you for sharing that with us. And anything else you want to add? I think you pretty well covered the topic.
Yeah,
well.
Just as usual, if you've got an advisor that you're working with, that's great. But if you're looking for a second opinion, or if you're not working with someone, you can always give me a call directly at 708-226-3412. Very
good. Thank you, Paul. For Paul Munical with Ameriprise Financial, myself, Ron Jankowski with Channel 4 and Palos Heights, we wish you good investment day.